Hello buddies, I am shivakumar.lachapeta, a certified equity research analyst, stock market investor and F&O trader with more than 5 years of experience in the stock markets. This video is for beginners in the stock market and people who want to know about stock market investments. In this video, we are going to discuss about the 5 traits that every new investor must have. Number 1. Patience. Number 2. Knowledge of your investment. Number 3. Confidence. Number 4. Staying away from hot tips. Number 5. Have a backup plan. Note, whatever I am suggesting here is only for educational purpose and should not be considered as an investment advice. Make sure you consult a financial advisor before making any investments in the stock markets. Investing is the most misunderstood concept in the financial world. Trading and investing are different from each other. Believe me, you are not going to get bankrupt investing in good quality stocks. Nonetheless, trading derivatives on margins can get you into serious trouble if done without proper knowledge and expertise. Anyways, let us get into the topic. The 5 traits that every new investor must have. Number 1. Patience. As far as I am concerned, patience is the most important characteristic required for an investor. As legendary investor Warren Buffett says, the stock market is a device for transferring wealth from the impatient to the patient. Let me repeat it. The stock market is a device for transferring wealth from the impatient to the patient. Many new investors make a mistake of checking their portfolio every day, worrying over their stock prices falling or feeling euphoric over the prices rising. In the long term, it is normal for any stock to fall by 50% or even more in your portfolio. If you are afraid and sell the stock at a 50% loss, you would be making a big mistake. It doesn't mean buying a poor stock and holding it forever. Likewise, never put your hard-earned money in get-rich-quick schemes. Number 2. Knowledge of your investment. Never believe anyone with your money when it comes to investing. Even if you follow an analyst or financial advisor, it is your job to know about your investment. Whenever your analyst asks you to sell the stock from your portfolio, make sure to ask what's the reason for it. Do not invest because someone has asked you to do so. Always have the purpose of your investment. It may be for your child's education or buying a new house. If you have a clear idea of the purpose and tenure of investment, you can be calm and pleasant. Go through the financial statements of the companies once in a quarter. All the listed companies release their quarterly reports. Number 3. Confidence. Do your research on which stocks to invest. Learn about the fundamentals of stocks in which you are investing. If you want to invest in a restaurant business, wouldn't you learn about the customers and locality? Investing is similar to owning a business. As long as you do the basic research on the company you want to invest in, you will be confident. If not, you will be prone to the panic attacks every time stock markets crash or when your stock price falls. Believe me, I used to trade naked options. Even though I knew the price is going to rise or fall, I had those heart attacks every time the stock price or the option price went the other ways. So I ended up exiting at minimum profits always. I will share a trade that I exited last month. First time I had purchased it at around 223 rupees per share in October 2021. But all of a sudden conditions reversed and markets went into consolidation phase. Still now they are consolidating. This company shares I bought dropped to below 130. All I knew was that shares were priced very less and I was getting those for at least 50% discount from their recent highs. Even though the stock belongs to small cap, fundamentals were too strong. So I averaged around 133 the second time. Eventually, I sold them for 260 rupees, a net profit of 57% in 11 months since the first purchase. This is the combination of first three characteristics: patience, knowledge, and confidence. Number 4. Staying away from hot stock tips. Most of the people who think they are investing in stock markets are just trading stocks on some anonymous calls. You might make some profits for a few days, but there comes a day when you may lose all of the money on trading those tips. Just ask yourself, why does anyone provide you calls or tips on the stocks? If someone is certain of the information, he would trade himself. There is no need to share his secret recipe with you for 2000 rupees or 3000 rupees per month. This is equally important for investing as well. Do not buy shares just because some TV channel says so or a famous investor has it in his portfolio. It is better not to invest like Rakesh Junjunwala or Radhakrishna Damani. These people are legends. Their investments are worth thousands of crores. Retail investors like us with a few lakh rupee portfolios cannot mimic their investment style. Number 5. Have a backup plan. No matter how good an investment you made or how confident you are of the investment, you must always have a backup plan. Ask yourself the following questions. What if my investment is a complete failure? How much would it impact my routine life? Have I invested my own money or borrowed money? What is the price at which I am willing to exit out of the stock? It is not guaranteed that a good stock can go on increasing in price forever. Do I know the difference between investing and speculating? Do I possess enough cash for needs and wants after investing? That's it, buddies. If you are patient and confident with adequate knowledge of your investments, you will succeed in long term. Also, stay away from hot tips and always have a backup plan. I hope this video is informative. If you like the video, share it with your friends. Thank you, take care, and goodbye.